Welcome everyone today. I'm Dr. Bill Seeger, clinical professor of economics and director of our corporate education program. Our webinar series for the summer on tax technology, data analytics, and taxation in general is the theme of our summer series. Remember, we have one in the fall on accounting and financial reporting, and we're coming on the heels of that. Even more exciting will be a discussion of corporate governance. So the webinar series rolls on. Today, I couldn't be happier than to welcome Dr. Talutto from Veritas. And she is just a fantastic person and a super smart tax person. And we know that she's smart because she likes transfer pricing, which is my passion, of course. So thank you for joining us. I told her I like to call people doctor in their first name. So Dr. Debora, thank you for joining us. We are very honored to have you.
Thank you so much for having me, Bill. It's an honor.
Okay, and we're gonna get started with you and all your input and insight in just a minute. But I just wanted to say that the broadcast comes to you from our corporate education program. It's physically located at UTA Fort Worth, our satellite campus, and we try and bring the best possible information to our business community, our alumni base, and anyone else in the Dallas-Fort Worth area is interested in advanced business education for executives. As I said, our mission is to bring this information. That's one part of our mission. Secondly is to bring the research of our business school, the College of Business at UT Arlington, to you all so that we can break down the theory and that statistics and all the good stuff in our learned articles, but make it in a practical way so you as executives can apply it. So hopefully you can hear it today and apply it tomorrow. And then finally, we're also into community service. One example was our COVID series, where we tried to bring information to the community given that particular crisis. So anything we can do to help the community through our research skills, our communication skills, we will do so. Well, with that as the backdrop, we want to get to obviously the highlight of the afternoon, which is Dr. Debora. And I'd ask her to flip to the next slide, and she's got all kinds of information, pertinent information about herself. And I'll let her tell you about her background, what she does at Veritas, and those sorts of things. So let me turn the helm over to you, Dr. Debora, and I will chime in occasionally. Oh, one thing, Dr. Debora, before you start. Hey everyone, we're going to be asking some polling questions today. And when I ask you a polling question and they're true false, answer in the chat box, please. So I'll interrupt Dr. Debora occasionally to do that. So with that, I turn it over to you, Doctor, and thanks so much for joining us.
Thank you so much for having me today. I'm a Brazilian tax attorney that decided to come to the US to do my LLM. And I ended up staying here, working for a big Swiss multinational for about 9 years as global transfer pricing manager. And throughout that time, I was accepted to get my doctorate at University of Florida, an SJD. So I balanced my doctorate, my full-time job, and 2 little kids, which was very stressful at the time. But because transfer pricing is my passion, I was able to go forward. And after 10 minutes, I went to Accesso as their tax director. But unfortunately, I found out that I hate tax compliance. And that position wasn't the best for me because I wanted to really use my skills on transfer pricing and international tax. So when the position became available at Veritas, I thought it was a great opportunity, which it is. So now I am Senior Tax Manager at Veritas, working with global transfer pricing and special projects. And I report directly to the VP of Tax. I'm kind of his right hand. And Veritas is a technology company. So I think that looking at the future of how tax departments should be starting to structure themselves, I think I can give a interesting practical guidance and some advice on how I see things going in the future. I wanted to explain to everyone that my focus, although I'm going to talk a little bit about the evolution of the technology in tax with the tax authorities and the taxpayers, I want to focus on a taxpayer side and tax advisors and propose solutions or explore what is out in the market that is making this evolution of the tax department something very important. Okay, so that's my background. But what I was going to explain is the world today has changed completely, not only because of all the digital companies that we have, but the economy, even before COVID. So that's why I put COVID on the side. Before COVID, we had an expansion of the way we do business, and digital services have become very important for every single industry, where it's becoming difficult to separate the digital economy by itself from the regular manufacturing. All the corporations nowadays are using some type of technology in their production, in their flows. So especially now with COVID, technology became crucial to keep your business to keep the business going. So you need Zoom to have calls. You need Teams. You need SharePoint to be able to share your documents. You need Google Drive. So the world has really shifted from where we were 6 months ago and 5 years ago. So technology now is crucial for everything. And of course, for tax, we have to understand where technology can help the tax professionals. So with that background on this evolution, I wanted to explore a little bit about how technology became this instrument to manage tax. So we do have, I mentioned here in this slide cloud, blockchain, big data, artificial intelligence, machine learning. So all these digital tools and robotics and blockchain, they are not only important, but now they're becoming a necessity. And that's because tax authorities are evolving, and they are also using this new technology to their favor. And taxpayers have to improve the way they do business, the way they structure their departments, not only to obtain efficiencies, but also to minimize their risk. And here I mentioned something that the OECD has published, that the tax administrations are using the rapid digitalization to adjust their compliance, their management of compliance. So they're using new technologies and new data sources to increase compliance and risk analysis. And therefore, that completely changes what the taxpayers have to be able to what the taxpayers need in their background to be able to conform with those new requirements. So, for example, we know that there is a lot of electronic filings in many areas. I can say that for transfer pricing, country by country report was a time change in electronic filings because it changed the transfer pricing from only preparing documentations to having the need to file transfer pricing reports all over the world and file that electronically. But we also know that there is electronic invoicing, there is VAT filings electronically. In the UK, they have the Making Tax Digital program where you need connections with your ERP system and the UK government in order to be able to calculate and prove your VAT. So the increase in this e-administration from the digital connect from the tax authorities to the taxpayers has completely changed the way companies, tax departments should look into technology. So technology becomes a necessity because you need to understand that the tax authorities are using data and all the filings that the companies are providing to assess risk and to raise red flags. In Canada, everything is automated. So if you file something that doesn't tie to another form, automatically there's a red flag on your account and you receive a notice. So the early intervenience from taxpayers into managing the information that they are providing to tax authorities is key to manage risk. And that's why tax has moved from the background to the forefront of many discussions in the financial world and board meetings. People nowadays, they listen to the tax department as to how can I minimize my risk, because you see the Apple case in Ireland in the European state aid analysis reviews, and you don't want that reputational risk. So you can understand that if the tax department doesn't manage the risk properly and is up to date with all the compliance requirements, that reputational risk increases, and that's something that is unbearable to your board of directors. So how can we as taxpayers be prepared, or advisors, by the way, how can advisors and taxpayers be prepared for this change? I think that
Dr. Debora,
yes?
Dr. Debora, can I ask you a quick question? Sorry to impede your momentum. Is it true that also the tax authorities are leaders in the use of technology and analytics, and so they may be ahead of taxpayers, which is usually we don't expect that. Typically, the large multinationals have an attitude that they're ahead on everything, but I wanted to get your thought before you went on as to whether the increased sophistication of the tax authorities may exceed where multinationals are at this point, and that's a further driver, I would guess. But anyway, what are your thoughts?
I think it really depends on the country. But for example, the Netherlands are investing in blockchain technology to monitor certain types of tax documentation. You see the UK and Canada and US investing a lot in electronic filings and in cross-checking information. So at this point, I think that the tax administrations are getting ahead of certain taxpayers, not all of them, because of course we always have, the Facebooks, the Googles, the Amazons, right, that they develop a lot of technology in-house to be prepared for those new requirements. But the requirements from the tax authorities are being, they're coming out so rapidly that even for big corporations, it's hard to keep up. For example, there is a new reporting requirement called DAX 6 in Europe that you have to report a lot of your international transactions. And the big four companies and a lot of tax services providers are still trying to come up with software solutions to help taxpayers with those reporting requirements. But because there is these different levels between the tax authorities on digitalization, for example, Poland already came up with their specific guidance on how to file online. And then Germany has postponed certain filings, and certain countries are requesting those filings should be simply done by a form filed online. Others are requesting this filing to be done in XML format so they can merge that information with country-by-country reporting or with other electronic informations they are receiving. So the taxpayer in this respect is staying behind the curve because the guidance has not even come out. So
Right.
the tax authorities, they might have an edge in that. So I think right now, I would say that the level field is a little bit tilted to the tax authorities side, and the taxpayers have to catch up.
Okay, great. And while I've interrupted you, let's give you a brief break, and we'll do our first polling question. So for everyone out there, especially if you joined late, we're having polling questions. These are true, false. You need to put the answer, hopefully the correct one, in your chat box. So put the answer in the chat box. The first one has to do with our tax departments rapidly digitizing. Our tax department's rapidly digitizing. That is the question. If you put your answer in the chat box, and we will get a record of all that. Thank you, everyone. Hopefully, Dr. Debora is recovering from her from her initial foray. Okay, thank you very much. That looks good. And Debora, sorry to interrupt. Just as a reminder, I've got to interrupt you 2 more times with the polling question, so I apologize, but please proceed. Thank you.
Yeah, but considering your polling question, I would hope that the tax departments are digitizing and that they are implementing digital solutions as fast as the tax authorities are. And one of the biggest challenges that I've seen in many places that I've worked with were how to gather your data. Because for tax, data is a strategic asset. If you don't have the right data, or if you have to manipulate that data too much, you're wasting time of your resources, and also you might not get the right answer. So data extraction, validation, transformation are very important items for data analytics, which is key to digitalize your tax department. You cannot get a good software solution if you don't have the right data. So when you're looking into opportunities to improve the tax department and to improve the flows and reduce the hours that your department is wasting in validating data, you first need to assess how can I better prepare my data for the tax function. So that's something that I recommend a lot of business personnel and people in finance to really understand what is the output, what do I expect from tax, and how can I make my reports consistent with what tax is going to be reporting. So it's always good to understand that data and analytics are crucial and they are key for what the tax authorities are looking at. Because of these risks, it's very important to understand that now tax is becoming a partner across the organization and not anymore in the background. In the past, the tax department would only hear about a new business transaction after it's put in place. Now, because of technology, because of reporting requirements, the tax department is in the forefront, so they can assess the risks and make strategic decisions as to where should the corporation move, should they move forward, because the tax function can improve the bottom line. If you are going to do business differently, you need to let tax know. nowadays with, the new digital services tax, equalization levies all over the globe, the business has to be careful as to what type of activities they are performing, because there will be tax consequences. So, and there will be tax reporting, tax compliance, and that's very expensive for the companies. So when you're building the tax function, it's critical that the whole business understands that a high-performance tax team will improve their bottom line, and analytics will improve the tax department, helping them spend less time in those mundane analysis where you're simply reconciling data, to be able to do planning and save money for the organization. So here I wanted to show the need to evolve. We all love Excel, and we know that Excel is key to everything we do in tax and accounting and finance. But Excel is evolving, and the additional tools that can help us, they can use Excel and push it to a different level. And I will explore that a little bit in the other slides. But the taxpayers, they have to evolve because the tax authorities are also evolving. Like I mentioned before, we have electronic invoicing, digital VAT reporting, disclosure forms, DAX 6, country-by-country reporting. Those are all increasing tax risks that if you do not have a process in place, and if you do not have a team that is open to learn new technology, you will increase your tax risk. And so this new era of using automation and artificial intelligence and smart softwares are needed to increase efficiency and to minimize risk. And this is why, again, tax is not in the background anymore. But all of this transformation, it needs to be managed properly. If you don't have the right data, you will not get the right result. So to improve that process, you need to start by managing your data. Then you can improve the tax process by understanding what each function needs. And then you can automate and integrate tools and develop the team to be able to use those tools. So to get a successful tax transformation, first you need to understand what's your end goal. Are you going to report VAT? Is it for VAT compliance? So if it's VAT compliance, what type of data do you need? And what type of data do you have? Do you need to aggregate different systems? Do you need Oracle to talk to Sabrix, to talk to something else in order to generate a report that has to go to the tax authorities? So identifying the end goal and the stakeholders and where the data is coming from is key for this transformation. So
Dr. Debora,
yeah.
you have a question? Mike will relay the question to you. Thank you, Michael.
Yes, the question is, are tax departments evolving, I should say, to the extent that they are using data analytics software such as R, SAS, SPSS, and Tableau?
Yes, yes. This is something I will show a little bit later on. But tax departments, some of the tools you mentioned, I have not used myself, but tax departments are evolving using Essbase, Hyperion, Alteryx, Tableau, Power BI, and using that technology along with software providers. So what I've seen is an Excel spreadsheet that feeds into Alteryx, that feeds into one source for tax provision. So instead of creating 2 or 10 Excel spreadsheets with 10 tabs each, you put that in a workflow in Alteryx, and then you link your Alteryx, and you create your workflow in Alteryx, and at the end, your output is something that can be connected straight to one source, and you can put your tax provision you can validate your tax provision. So when you have different ERP systems and you have to reconcile, in the past, you had to update all your Excel files, which takes a while. If you create an Alteryx flow, that update goes to 5 seconds, and then you have an output. So taxpayers are using this new technology to improve those functionalities. I've seen in transfer pricing, especially, we have been using technology for a while, but now I'm seeing also with VAT and indirect tax, a lot of, I'm going to mention Alteryx a lot because Alteryx is a tool that we've been using internally, but also it's a tool that has partnerships with a lot of tax software providers, and they are creating links to those tools like OneSource, so you can you can finish your whole process. So that's why Alteryx we're using Alteryx more than Tableau, and they do have some similarities, but the tax departments are evolving to that. Of course, we are not at the same level yet as finance, because finance has been using some of these tools for a while for forecasting and for other things, and the tax is kind of catching up. But tax is that big new thing because of the risk that if you do something wrong or if you report something incorrectly, if your Excel spreadsheet has a flaw in a formula, it can mess up the whole reporting.
Right. So Dr. Debora, we'll let you take a brief break, and I'll ask my second polling question, and then we want to hear more about the tax department transformation. But here is our next true-false question. Will improving the tax function improve a business's bottom line? Will improving the tax function improve a business's bottom line? Please put your answer in the chat box so we can record it while Dr. Debora recovers for a few minutes.
And I apologize if sometimes I'm too fast. Please let me know. It's something very exciting to me, so I can.
No, we can, as they say, we can sense that passion, and we love it, especially since this is kind of right after lunch. We appreciate your passion. It's the time of day when you get a little droopy, yes. So good that you're excited. But I'm with you. This stuff, people just don't understand the excitement. So I'm glad it comes across. Everyone has completed their answer, Dr. Debora. So please lead us on here in terms of the transformation.
Okay, so the best way to transform a tax department is to look at synergies of other areas of the business, look at other tools that are being used by other departments, and then you can enhance the current process. So this is just an example of how can you look and how the tax data flows with the tax department. So first you have your ERP systems, and then you need to generate your transactional data that will be used for your analytics, calculations, and adjustments of your tax function. So this whole tax compliance and management system that is done by tax professionals in order to do the last column of reports and filings is usually done manually in Excel file. And there is a lot of issues that come up with these manual inputs because you always have there is always a possibility of human error, which when you have more touch points, that possibility increases. So automation of this piece here in green and blue are the things that can especially the pieces in green, the connection between the ERP systems and your, corp tax or OneSource tax provision. That connection is where we need to minimize the data points where you have manual inputs in order to be more successful. in your filings and minimize tax audit risks, because any inconsistencies with your filings will generate an audit automatically in many countries. So that's why when we are looking at Oracle, it's important to understand what is it that the solution already has from a finance perspective, and how can you integrate this with the tax department. So the most important piece here is that Oracle already has many ways to extract data that is useful for the tax departments. So when you're looking into how to evolve your data analytics within a tax department, it's important to map what data is necessary for each function. For example, in transfer pricing, you need to understand departments, and you need to understand hierarchies. You need to understand headcounts, where they are located, so you can understand your functions, where they're being performed. When you're talking about provision, you need to understand all the impacts. If you have different countries with different ERP systems, and you need to do a global tax provision, you need to understand what types of tax records you can obtain that are consistent. So it's important for any transformation, it's important to understand the data. And here, I just wanted to share the transfer pricing, like I mentioned before, was one of the first parts of tax. Transfer pricing and VAT, I would say, were the first areas of tax that really the tax authorities took that next step into technology, and the taxpayers are catching up, or are trying to catch up. So in the past, transfer pricing was isolated databases with manual searches, and financial data and questionnaires were sent locally to controllers. Now and in the future, there is a lot happening, and at least what we are doing is we have AI solutions for benchmarking and documentation, where we connect our ERP system to a software solution, and we get the final report that goes to the tax authorities. So the manual input is literally to review if the data has changed. For example, if I'm doing a transfer pricing calculation and I'm using an automatic tool that is an AI machine solution, and I have a change in a department, that's something that I have to tell the tool that was the tool is going to tell me there's a change, and I have to adjust my mappings to reflect that change. But at the end of the day, I don't have to go in each line of my Excel spreadsheet to verify if there was a new department added. The machine will tell me there's a new department needs to be reviewed, so your calculations can be correct. So nowadays, this future is here, and transfer pricing especially, there is a big difference from the past before BEPS. I don't know if everyone know about the base erosion and profit shifting project from the OECD, but this project changed the shift from having a local transfer pricing documentation to a global, transparent, and consistent approach to transfer pricing. And this, to achieve that, you need technology. There's no way you can report consistently around the world if you don't have technology in place to get that information. Transfer pricing, like I said, the intercompany process and transparency are where technology can really improve for tax departments, because you need that global visibility of the data. And this is not just for transfer pricing, this is also for tax compliance. You need global visibility into your data in order to optimize your global compliance for your provision process, for your transfer pricing country by country reports, because for transfer pricing, the technology can manage your intercompany activity to ensure it's defendable. For tax provision, the technology can highlight any risks and any inconsistencies. And technology is helping tax departments manage efficiently and effectively. So this way, we can improve the process. And here I just bring some examples of potential technologies and big data that have improved in the past from a transfer pricing analysis. I know transfer pricing is not the background of everyone in this today, but I just wanted to show there is cross-border solutions is one that you might see on LinkedIn a lot because they do a lot of podcasts, but they are machine learned functional analysis software. And then we have a lot of databases that are using, improving their process for comparable searches. But here is a tax lifecycle that is you have to streamline so you can improve reporting. So everything goes back to data. Provision, extensions, estimated taxes, compliance, audits, everything needs data management so you can improve your reporting and minimize your risk. So
Dr. Debora,
yeah.
excuse me. Let me do my last polling question, and then I'll let you proceed. So take a little break. And for the audience, here's our third and final polling question, true, false, identifying synergies with other areas of the business is part of a successful tax transformation. Once again, identifying synergies with other areas of the business is part of a successful tax transformation. And people are answering. And not everyone, is an expert on transfer pricing on the call, Debora, but I think it's a great example to show, incredible amount of automation that's going on, and your point about the introduction of artificial intelligence and I think a little machine learning is really fascinating as well. So, those were fabulous points. It looks like everyone is completed, Debora, so I'll let you proceed. Thank you.
Yeah, so transfer pricing is a key area that we see a lot of machine learning. And there's a big evolution with the players on the software industry to support the transfer pricing function. But there's also, I've seen a lot of that also in the VAT area because of the new e-invoicing requirements and the need, for example, in Brazil, I'm from Brazil, but in Brazil you have to report all your transactions to the tax authorities electronically, and you have to file everything electronically. And they have the tools to, of course, they don't have enough resources, but they have invested in tools to generate, to check if the data is consistent.
Yeah. Right.
So if the taxpayer doesn't have that in the background in gathering their data and matching the information that they are passing to the tax authorities, it's an automated audit. It's very cut and dry. So machine learning is key to, and data analytics, understanding the data so you can improve your process. And the reason why I mention Alteryx here is because I've seen a reduction in, not a reduction, a change in the work that tax professionals are doing due to technologies like Alteryx. So instead of, when you have to create your VAT reporting and you need to separate, let's talk about US sales tax. You have to separate your sales by location. And every month you have to get a report with sales by location. Then you have to filter that, apply the rates to start, your sales tax reporting. If you create a repeatable workflow in Alteryx, you can create one file, one data point that you're going to download monthly from Oracle or from SAP, and push that data point into your workflow. And you're going to, and you create, at the end, you have the final output file that you need for your reporting in a matter of seconds. Of course, there is the initial investment of time to create those workflows and analyze the data that are coming into those workflows and test that and train the team. But in a repeatable task like that, instead of spending a lot of time in validating that data, the taxpayer and the tax personnel will now focus on how to report and how to improve VAT. They will have more hours to improve their process, to dedicate to audit questions, and to do some planning instead of do that repeat work that is manual, that has chances of error, and you can scale with not that many people. So Alteryx is a way to do that. And here on the slide, I have just an example of how Alteryx works. But a lot of the Alteryx functions in their workflows are similar to Excel formulas. So when you click on Alteryx, by the way, Alteryx has a 14-day trial or something. If someone is interested, you can just go to their website and you can get a free trial. And I don't get anything from advertising from them. I just like the tool. But their functionalities are similar to Excel, but they are much easier to apply because it's very fast and you get your results very fast. And you can clean up tables where you have those errors, or if you have empty cells, or if you have zeros. In Excel, sometimes you have a huge tab and then there's one cell in the middle that has no number, and then you have to find that, otherwise all your formulas are can go wrong. So with Alteryx, you fix that. And here is a little bit of flows that you have. You can look up things, you can convert from text to tabs, you can change numeric values, you can create many different flows to get that to work. Alteryx is a workflow that at the end of a workflow, you can generate a file that can be connected to certain tax softwares. So for example, a lot of companies in the US, they use OneSource tax provision, and Alteryx has a link to OneSource. So your output file can be directly imported into OneSource. So you're pushing technology into technology with direct links, and you're minimizing that possibility of manual errors, So that's why it's an interesting tool, and I recommend everyone to take a look at it. And there is other tools that do similar things as Alteryx. I just have experience with Alteryx. That's why I can recommend that. Another interesting tool is Power BI. That's something finance has been using for a long time, but tax has not used as much. So Power BI is a Microsoft tool that you can get either free or you can get a small license to have increased functionalities. But Power BI is a great tool for reporting to management and for controls and for audit trails. For example, OneSource has a software that does the transfer pricing calculations, but the output of OneSource, whoever has worked with OneSource before for provision, the output of OneSource is useless if you don't manipulate it. It's literally an Excel spreadsheet with no formula. And then you have auditors on your back asking, where did this number come from? Why do I have this? If you put OneSource extract, a transfer pricing OneSource extract into Power BI, and you create a data presentation on it, you'll be able to see that the questions are minimized because you have this great visualization of the results that your spreadsheet are showing. So if you did a tax provision calculation, you can show where you're paying, each country where you're paying tax. You can show how your ETR is fluctuating. You can create this for compliance to make sure you can show which countries you still have to file, which countries you have already filed. So Power BI is very positive for a tax department, also for not only for consistency and for the visuals, but also for messaging to the CEOs, CFOs. If you have a clear message, most likely you're going to get a good response. So a tax department sometimes is seen as a cost. It's always a cost, you know, so we always want to minimize that cost. But if tax becomes a partner where tax is showing with clear visuals the benefits of certain tax positions that the company is taking, you modify that trust, and you can see that the leadership will value the department more. So I can share my slides with everyone later, but Power BI, you get, you know, a clear spreadsheet, and you create files where you can add, you know, filter things from your financials, and then you can get, for example, you could show here tax reporting per country. You could show revenues versus tax, and you can create a flow showing, making the comparisons you want to make your case, and to share the tax exposure or the tax risks with your colleagues. And again, the finance department is very familiar with Power BI, so it is easier when tax is leveraging tools that are already used by other departments within an organization, rather than creating a specific thing for tax that nobody knows. So when you're using similar technology, you have that synergy. It's easier to get the right data because they know where to put the data from, and they know the interactions between the systems. So this is what I have for today. And again, I know there are many technologies out there. There are a lot of new machine learning tools for tax. But the message that I wanted to bring today is, I see the future of tax departments as being as automated as possible. So the tax professionals go from working every day on compliance and trying to get things done on time to a new view of, for me, it's the new view of the future for tax, which is understanding what's required from them and being ahead of the tax authorities in cases of questions and audits, because you understand your data. Right now, there is that game of, we play that game of catch up because we have to file. It's very limited amount of time. It's a lot of information, a lot of countries. Every country has a different requirement. With data, with data and with technology, you can actually understand what is required where and be proactive and clean up your story and understand the business better, so you can provide a better tax service.
Well, thank you very much, Deborah. That was fantastic, and it really gives us a view of what the future is now, I guess, but it really gives us a future of what has arrived and what we need to get on board with. And so thank you very much. This time we invite questions. I know that Mike put that out in the chat, but we have another 7 minutes or so, so please take advantage of all of Dr. Deborah's great knowledge. It's right here for you, so send a question. I promise no more polling questions. Send for Dr. Debora.
But it was good to have the polling questions because then it breaks down a little the.
Yeah. The
Now, Dr. Talutto, we actually do have a question coming in, but I do, before I get to that question, are you open to receiving any contact or any email if people have follow-up questions? Or?
Yes, you can send to my Texas A&M email that I put on the screen. It might take me a couple of days to respond because I'm in the middle of a lot of reporting requirements. So, but I will respond as soon as I can.
Great. And one of the questions that just came in, will full-fledged automation pose a threat to tax preparer jobs?
So I think the answer is twofold. So I think tax preparers, they have to be careful. Nowadays, everyone has to understand that every job that you're manipulating one thing consistently without changes might be affected by technology. So, but if you have a job that you're validating data points, then you have a chance that your job would not be taken away. But there's always going to be the need of tax preparers. I think that tax preparers specifically have to improve their skills so they are not overtaken by any possible new technology. But there's always going to be a need of that a person to understand the new regulations and how they apply. Like a TurboTax is not going to work for complex matters. So if you are doing tax returns that can be done by H&R Blocks or TurboTax, then yes, your job might be at risk. But if you're working on tax returns that actually are complex and have different things, then your job might not be at risk. So what I would recommend, I don't see as a threat, but again, everything nowadays has changed. So you need to be prepared to, you not only be good in calculations, but also be good in technology. That would be my recommendation. You're on mute, Michael.
You're muting.
So the next question that we had come in is, in the future, will blockchain technologies be used in tax departments?
Yes. One of the things that I've seen, and again, I've seen in the Netherlands, is blockchain being used for documentation and audit trails. But I think that there could be other uses, but it will be used. I think that first, the first, besides the documentation piece and audit trail, I don't see an immediate transformation yet with blockchain. It's more the machine learning aspect that is increasing in tax, but there will be definitely an increase in that.
If there are any other questions, we will take some time. I'll be monitoring for the next minute or two here the chat box, so feel free, please, to submit any additional questions that any of you might have. In the meantime, though, I want to use this last minutes here to say thank you again, Dr. Talutto, for giving us your valuable time today for our webinar. Even to someone such as myself with no tax background, I will say it was very interesting to hear. And as Dr. Seeger said earlier on, your passion for the subject material definitely is conveyed through your presentation. So we can't thank you enough. As the director of UTA Fort Worth, I can't thank Dr. Seeger enough for heading up this brand new exciting initiative with UTA Corporate Education at our downtown facility during these extraordinary times that we're dealing with. Of course, as we all know, we've pivoted over to capitalizing on free webinars like this that offer CPE credit hours to all of you who participate that are, practicing CPAs and are maintaining your licensing. With that being said, we are in the process of shortening our turnaround time for certifications or certificates to go out to all of you via email. As long as you've registered for today's event, we have your information here. You've answered the polling questions throughout this webinar. We will record all of that and put together our certificates and get them sent out to you by email. Give us about 48 hours typically to develop those certificates and get them sent out to you. So don't be alarmed if you don't get them immediately, because we do have to create each individually. But I do want to go ahead with saying thanks to Dr. Talutto. Also point out the fact that our next webinar is with Dr. William Burns, who's also a colleague, I believe, of yours with our Texas A&M Law School. And he will be speaking on FACTA August 5th. If you have a smartphone available with you, you could just scan that QR code. It'll take you right back to the registration form for our next webinar event. And stay tuned as well, because beyond August 5th, Dr. Seeger has put together a pretty exciting couple more webinar series that will be launching in the fall semester and also the spring of 21. And we hope that all of you will stay tuned with our Corp Ed, as well as when we do venture back to campus with some face-to-face programming in the most safe way possible, of course, for professional development and everything else along with the initiatives here. So Dr. Talutto, thank you so much. Really appreciate it. I don't see any other additional questions coming in, so we will give you the rest of your day back. And Dr. Seeger may have some closing comments, I'm sure. So.
Yes, I want to thank Dr. Debora again. Thank you. This was tremendous and really brought us up to date on what's happening in tax. It's a lot more exciting than people realize, especially if you like technology and data analytics. This can be an exciting, expanding and developing field. So thank you so much. And I want to thank Michael for all that he does. Not only does he run the campus, but here he is helping us through the technology of the webcast. And we do not see his able right hand, Josh Young, who's behind the scenes. So we want to thank him as well. And once again, thank all of you for attending. We'll see you soon for Dr. Burns to talk about FACTA. And thank you again, Dr. Debora and Michael. So have a great day.
Thank you for this opportunity. Have a great day.
Yes. Bye-bye.